Good evening and welcome to the Fortune Report. My apologies for running a little late, had some technical difficulties, but I'm so glad that you all decided to join in today because we have some special guests to educate us today on ways to improve our efforts toward home ownership. I have Mr. Greg Showles with us today from Citizen National Bank, and I'm going to ask him to introduce the other two people he has with us today.
They may not want me to give their introduction because they never know what I'm going to say.
We know, Greg.
But
We all know that.
we've got Mr. Trey Alford and Taisha Smith with us. They are sitting, I think they're in our Meridian office, which is our home base. Looks like they're in one of the boardrooms there, and they're super excited to have them with us. All I do is try to lend money. These two guys, their responsibility is to go around and educate people. So excited that it worked out where they could join us today because they're going to have a lot more information than what I can provide you.
Okay. Miss Smith, the way the screen is positioned, we can't see you.
I think she did that on purpose.
Did she do it on purpose? Now we can see.
Exactly it. That's exactly it, Mr. Green.
Now we can see you. Um, Look, what we're talking about today is so very important. As you all know, a lot of folk are interested in home ownership, but they don't know how to move to the next step. And when you're working every day and you paying bills and you're paying rent and you're trying to save money, but it's kind of hard to save up enough money to move toward home ownership. And so I want you all to just talk to our audience about some of the things that they can do and some programs that may be available that they don't know about. Because I often say you can be in a desert and there could be an oasis over there like 3 feet from you, but if you don't know it's there, you'll die out there from thirst. And so I don't want our audience to die from thirst. I want them to know what's out there, what's available to them, and what they can do in order to do that. So, Greg, I don't know how you all want to do that. I have some questions, of course, you know me, later,
Right.
but I would like for you all to just kind of talk about some things that our audience need to know.
Sure. One thing that I always like to get it started with is why are we talking about home ownership and why is it so important? What does it do for you as an individual or you as a family or even we you can throw in generational wealth into something like this with home ownership. And I always use the example because it's hard for people to think about it until they don't hesitate to go out and purchase a car, spend $50,000 on a car, which is not out of the norm these days, sadly. Um, and 2 years from now, that $50,000 car is going to be worth maybe half that.
Mm-hmm.
So you've got something, you just spent a whole lot of money on something that's going to depreciate. It's going the wrong direction. So and then if you look at rent, you're not going anywhere there. You don't have anything that is appreciating. Granted, you don't have anything that's depreciating, but you always want to be moving in a step forward. And that's where home ownership comes into. Um, Unless you just buy in the worst area, which that is kind of hard to find in the Metro Jackson area, which is kind of what we're focused on today. Um, a home is going to appreciate.
Mm-hmm.
So now you've invested into something. Not only do you put a roof over your head and a safe place um, for to raise a family, but you've made an investment into things that will help you move forward. That's something that's going to appreciate. Um, so I always like to kind of start with that to tell people that there is a reason. Sure, I want to lend money, um, but the main reason is taking that step and making that investment. Don't look at those things that depreciate. Let's move in a direction of things that appreciate. So home ownership is something that's I think, very important. So you talked about programs. There's all kind of programs out there, and I could bore people. You said we had an hour. I could spend an hour on just talking about loan programs. But let me tell you this about loan programs. Somebody that is dedicated to trying to better themselves and get in a position to buy a house, we will work with them. Trey and Taisha especially will work with them to find a way to make that home ownership a reality. There is a wide range of loan programs. There are down payment assistance that piggyback onto those programs. The biggest things you want to think about, the most important thing is first understanding why you're doing it, to give you that drive to move toward home ownership. And the second part of that drive is what everybody talks about is credit score. I get phone calls all the time. I don't have very good credit right now. I'm just not in a position where I can buy a house. Well, we can help with that. And there are little things that can be done that don't hurt bad, that can increase a credit score. You just got to be willing to take that step of faith, to reach out to somebody and say, okay, I am dedicated to improving myself, improving my family, and I want to move forward. Tell me how I do that. That's step one, is making that step. And we can take care. We can look at credit scores. We can see where issues are. If you're wanting to buy a house, first thing you need to do is pay your bills. We're going to look at that. It sounds like that mean old banker, but if you have a history of not paying other people, what makes you think you're going to pay me?
Right.
And unfortunately, we do lend with the expectation we're going to get it back. So get in the habit of paying bills on time. That will start increasing that credit score. Little things like if you have credit cards, there's some magic numbers on those credit cards that would increase your credit score. You don't have to go in and pay off all of these credit cards. What they look at is how much will that credit card company allow me to spend versus how much have I spent. And if we can get that difference, let's start at 50%. At 50%, you're starting to move in the right direction of improving that credit score. And then if we can get that down to just 30%, you owe 30% of whatever that available balance is. Now you've actually increased your credit score. And there are ways to do that. Of course, the first way that everybody talks about is, you just have to pay a little bit more on those cards and quit using them as much. But you can also, if you're somebody that has demonstrated that you are credit worthy, now there's a risk to this one. You have to be committed when I make this statement. So what we're looking at is available and the max.
Is that, I'm sorry, Greg, is that like credit and debt ratio?
That's right. That's
okay.
right. So you could call your credit card company. Say you have a $2,000 credit limit on a card, and you owe $1,800. Even though that's not big money, what they're looking at is that available credit there. You don't have much available credit, so your credit score is going to go down. So you could call the credit card company and say, you know, I've been paying pretty good. I'd like to increase my limit and go from a $2,000 limit to maybe they'll increase it to 3,000 or 4,000. Now, I'm not saying that gives you the ability, gives you the right to go out there and spend that extra money, but
Right.
now let's increase that gap. So now your score is going to improve, even though you haven't paid it down anymore, but you've allowed yourself to have more ability to spend there, but you don't spend it. That's the main thing, and that can do the credit score. And there's different loan programs while we're on the credit score. There, you know, every loan program has a different minimum credit score. Some of them are 660, some of them are 640. We have a program at our bank that lets the score go down to 625. There are some that you make it even get to like a 600, you know. But the key to credit scores, the better we can get that credit score, the better interest rate we're able to offer. So we always want to. I don't want us to just try to hit that minimum score. I want to improve on that to take advantage of a better interest rate option.
Okay.
I'm going to take a breath a minute. I know Trey's going to say something about what I just said.
Okay, Trey, what do you want to add to that part?
Very good, Greg. Thank you for that. And actually, Greg did a great job with that. I should say, Dr. Fortune, thank you for having us. Thank you for allowing us to come and join you and your audience here today to speak to this very worthy topic of home ownership, especially in the African American community. I will echo a lot of the things that Greg said, just to give you an idea of who we are. Again, my name is Trey Alford. This is Taisha Smith. We are the Community Development Officers with Citizens National Bank. We are headquartered here in Meridian, Mississippi, but we do travel throughout the state, including spending a lot of time in Jackson, where we attend a lot of community forums very similar to this one. And our jobs are really to plug into the community and hear from the community in terms of what challenges you're experiencing in this particular instance, achieving home ownership. And so we hear from people a lot of the barriers that they face, many of which Greg has already touched on. And credit and down payment assistance, when we speak to people, are really what we hear the most. In fact, we several years ago, we did a bank-wide survey, and 90% of the respondents that were experiencing challenges with home ownership cited credit and down payment assistance as the two primary challenges that they were having.
Right.
So Greg is exactly spot on when he starts with credit. He leads with that because obviously, as a mortgage originator, that's one of the problems that he runs into a lot. You know, that's probably, you know, when he goes down his list of denials, it's probably in the top, 5 reasons of why we have to deny people mortgage loans.
Right.
So,
May I ask you a question, please?
sure.
Greg had said something earlier, and you were going in that direction too. It has always been very interesting to me how folk can go in and get a car, like he said, some cost them $50,000, but they having the same credit score as when they go to the bank to try to get a loan for a house. So is it that the credit score for the housing is a little bit more stringent than it is for buying a car?
Yes, it's a lot more stringent.
Okay.
Everybody thinks that everybody has one credit score. You actually have 1,000 credit scores.
Okay.
It depends on what kind of credit you're applying for as to the type of matrix is used to calculate your credit score. Typically, a mortgage is a 30-year commitment from a lender. Therefore, that is going to be a lot more stringent. We're going to look at it and score your credit history a lot harder than, say, a car dealership who knows that, that it's really easy for them to go and pick up their collateral. And drive it back to the lot.
Yeah.
It's a lot harder for us to go pick up a house.
Right.
So there are a whole bunch of different metrics that give you credit scores, including, but I encourage people to use them, freecreditreport.com. You have some places like that where you can go and look at your score. Now, granted, it's not going to match the score that I pull, but it's going to give you a good gauge of where you are. It can also show you if you have some fraud somewhere. You could pick up on that on doing one of those, and that is one of the. They always say there's nothing free in the world. Well, you can get one free credit report a year. That is free. And
now, does that affect your credit?
Tell you how to get them.
Does it affect your credit rating when you ask for your score?
For those, it's more of a soft pull, so
Okay.
that won't impact your score.
Okay.
Right. And I'll just add to that, even here at the bank, within the community development department, we have the ability to do exactly what Greg said. We can soft pull someone's credit. And when we do our soft pull, while Greg will use 3 different scores, Tri-Merge credit report, we don't get 3 of those, the same 3 scores, but we do get 1 of those 3. So the TransUnion score that we're going to pull is going to be exactly the same score that Greg is going to see when he pulls credit.
Okay.
While we're on credit, one other thing. Sorry, Trey, I didn't mean to interrupt you, but if I don't say it now, I'll forget it.
You're fine.
While we're on credit reports, one of the things that can really hurt a credit score, if you go to any of these payday loan places, even if you're paying those on time, because that is subprime lending, that is not going to improve your credit score at all. So stay away from those if at all possible.
Okay, so subprime lending. Now, what I know you're saying like those things, but what about like those tower loans or those subprime or those kind of places like that? Okay. Because I mean,
I'm going to say yes. I'll defer to.
But we're trying to educate. That's what we're trying to do. And see, the thing about it is, folk, if you don't know something, you don't know. And so if you're thinking you having I got a quick fix and I need to borrow this, and then you go in there and then it's putting a ding on your credit, they need to know it's putting a ding on their credit so they can try to find another alternative.
That's exactly right, Dr. Fortune. I'll just say that, without necessarily calling names, that
we'll stay away from names. Okay.
Consumer finance companies, some will move your score in the wrong direction. The credit bureaus are very much concerned with how we manage our credit, right? So they like to see that we're being responsible in terms of how we're managing our credit. And so if we are using consumer finance companies that are charging 30% interest rates, then that's not very responsible. And so that's going to be reflected on your credit report and credit score in a negative way.
And now in the inverse, what about people who, because someone asked me this question before when I was telling them about what we were going to be talking about today. What about folk who don't really have credit? Like they've been paying they pay cash and they've done all this stuff because they don't want to have a lot of debt. So talk a little bit about how that could be negative, is not negative, but how it could impact them with trying to get a loan for a house.
Right. So I'll just start and then pitch it over to you, Greg. I'll just say that there is a term for those people. We call them credit invisibles. Okay. These are the people that typically pay things in cash. It's not that they have bad credit. It's just that they don't leverage credit, right, at all. And there are some people who truly believe that credit is taking out loans, things of that nature is a bad thing. And so unfortunately, when you approach a bank for a mortgage loan, if you've never financed anything, then you're not, when we pull your credit report, there are not going to be any trade lines on that credit report. And it's really important to understand, and Greg touched on this earlier, it's important to understand that while people call us bankers, another way to describe us is in a similar way that you would describe an insurance company. We're risk managers at the end of the day, right?
Right.
So our jobs are to manage risk, and the risk that we're always managing is that risk of repayment. And so pulling that credit report and analyzing that credit report is how we gauge the risk of making that loan. And so if you're a credit invisible who doesn't have a credit history, then there's no way for us to gauge that risk that you present. And so unfortunately, you don't, I'm not saying it's impossible to get a loan. There are loans that we have that can help add trade lines to your credit report. We have score builder loans, for instance, as an alternative to some of these payday lenders and some of these consumer finance companies that are very easy to get into. It's very much a score-driven product. And so we use those loans a lot in order to help people build or reestablish credit. I'll let Greg speak a little bit to someone who has no trade lines on a credit report.
Yeah, and we do see that a fair amount. Just like Trey said, they don't believe in credit. If I have to borrow it, I don't need it. But it's kind of hard to get in a position to buy, especially your first house. In that situation, you're gonna have to borrow some money for that, typically. Yeah. And like Trey mentioned, our bank, and I know other banks too, offer credit builder loans, and they are put in place specifically for this purpose, to help somebody that does not have a credit score, or maybe has a very low credit score. It will help somebody with a low credit score build their credit score up. And it's designed in a way that I can't say that you can't fail at it, but you got to try real hard to fail at doing one of these type loans. Okay. And so you go to your bank, preferably Citizens National Bank, and tell them, hey, I want to improve my score, or I want to try to establish a score. I hear there's a loan product for that. They're going to tell you, yes, the credit score builder loan. As I think just about all banks use that same terminology, and they can get you set up with that. So that gives you one trade line that's would be considered an installment, because you're going to make equal payments every month on that. So that's an installment loan. Credit bureaus really like to see those out there, and that you're going to be paying it on time. We're going to structure it where it is going to be paid on time. So you will start getting a score, or start seeing an improvement in the score. The second thing we're going to turn to you and say, okay, well, you need a revolving line also. A revolving line would be like a credit card. Okay. So we can assist at Citizens National Bank, preferably, or any other. A lot of banks offer credit cards. You have to use it very responsible. But so just without much effort at all, you've got one installment line, you've got one revolving line, and all of a sudden you're going to start generating a credit score. Mm-hmm. There's no silver bullet that we're going to shoot out there today where people can get off of this podcast and call the bank tomorrow and say, I'm buying a house today.
But we're moving them in that direction. That's what we do. We're moving them in the right direction.
That's right.
It may not be today.
That's exactly right.
But we're going in the right direction.
That's it. That's it. It may take, some people, it may take a month or two to get to a point where they can purchase a house. I have worked with people that were committed for a year.
Mhm.
I want to buy a house. I want to provide security for my family and that appreciation, that equity that I can leave to children. I am committed to doing that. And it took them 12 months, and they are now on their second home, and they just keep moving up. And it's just, those kind of stories, that's why I come to work every day.
And they're building generational wealth in that
That's right.
aspect as
That's
well.
right. They went from
It's
nothing
something-
to now they're living in a, I'm not going to mention any names, but this couple's living in a $350,000 house, and they've got equity in that house of about $70,000 already. And when we started this process several years ago, they had nothing.
Mhm.
So they have moved in the right direction in a short time, but they were committed to it.
And that's the thing. And we want to move people from hopelessness to hopeful, to give
That's
them
right.
something to look forward to. And that's why this is so important what you all are talking about. And I guess at some point y'all gonna let Ms. Smith speak, but I'm just saying now, okay.
He's going to provide the summary and close everything up and put a pretty bow on it for us.
I'm just here for more support.
More support for them too. Well, see, one I know, so I know, and he and I both are very talkative, and so but we both have the right attitude in terms of trying to help folk, and that's the good thing, and that's why I was so glad that he agreed to come on the show and to bring you all as well. But moving back to now, I did get a question because some people were concerned. Like I said, we're trying to save up enough money for to pay down on a house because they're living in some of these rental facilities and they're paying like more than they would be paying for a mortgage. But
Absolutely.
The problem is trying to save up enough money for a down payment. So can you talk a little bit about that?
You want to start?
Yes, we absolutely can, and this is a great segue into why Ms. Smith is here, Dr. Fortune, because she manages a lot of our down payment assistance programs. But real quick, just going back to the comment that I made earlier in terms of what we do as community development professionals in the way that we get out in the community and get feedback from people who are experiencing challenges purchasing homes. We spoke about credit. That's probably the main challenge that we identify. But right after credit is always down payment assistance.
Mm-hmm.
So this is the other significant challenge that people face. And so what we do is when we hear the feedback from the community, we come back to the bank and we start meeting and building out programs to address some of the challenges that people have identified for us. And so with down payment assistance, this is a really big one and one that we have been busy at work trying to address. And I think we've done a pretty good job of it. I'll ask Ms. Smith just to sort of speak to some of the down payment assistance programs that she's helped plug us into over the last several years.
Okay.
All right, Miss Melanie, it's my turn.
Now we're fixing to really see who's the smartest in the room.
So we do offer several options for down payment assistance. We have some that are grants, and then we have some that are partnered with some of our loan mortgage products that are loans that you do have to pay back. So we do partner with certain organizations such as Mississippi Housing Corporation as well as Federal Home Loan Bank to be able to provide down payment assistance. One of them is up to $20,000, another one is up to $25,000, and those are both grants, but you do have to qualify for those. It's not just for any person, unfortunately, but it is for those that we would say are underserved or low to moderate income. So they have to meet certain criteria in order for them to be able to access these funds. Now, on the other hand, like I said, we partner with Mississippi Housing Corporation to offer some down payment assistance, such as some of the products they have, they are loans that you do have to pay back. But in some instances, if you say, for instance, if you are a teacher, there is a product where they have that we partner with them for teachers that is up to $6,000, I believe, and this is in the form of a grant that they won't have to pay back.
Okay.
So some of these products, I'll just give some names. For instance, the Home for All that we partner with Mississippi Housing Corporation, and then the HELP grant that we have where we partner with Federal Home Loan Bank of Dallas to be able to offer these funds. Some of the other products that we have from Mississippi Home Corporation, they again are not grants, but they are loan products that will help with down payment assistance. We also offer an in-house product, which is partnered with one of our mortgage products, which is our Home Opportunity. If they qualify for the Home Opportunity loan, then they can also qualify for a Home Opportunity Plus loan, partner with that Home Opportunity loan to provide down payment assistance for individuals that may not have that money in their savings account to purchase a home, which is again one of the barriers that a lot of homeowners face. So we do have products, we do have some grants that, but now these grants are on a first come, first served basis. So they're not guaranteed all the time. So you kind of have to meet us, or you kind of have to get there just in the nick of time in order for these grants to be available. But yes, as of right now, we do have funding for these grants. One is up to 25,000, which is what I stated with the Mississippi Home Corporation, and then the other one is 20,000 with Federal Home Loan Bank. And at this time, we do have those available.
Okay. That's good information to know. And now, so is this, not that I would want people to go to Citizen if they can, but Citizen is not in every place. So can they go to any bank and just kind of ask them about programs, or these programs specific to your bank?
Now you can, and my suggestion would be for them to go to the banks and ask them about these products, but they are not offered through all banks.
Okay.
Right. And unfortunately, the bank that they are seeking to be their mortgage originators, they have to be partnered with these organizations in order to access these funds. So if their banks are not partnered with Mississippi Housing Corporation, or if it's not partnered with Federal Home Loan Bank, if they're not members of these institutions, then they will not have these programs. Okay. So they will have to go to a bank that are members of these financial institutions that offer these. Now some banks can have some products themselves that they may have, like our in-house product. They may have some in-house products, but the Mississippi Home Corporation and the Federal Home Loan Bank grants, you have to be a member of these organizations in order to access these funds.
Right. And like I said, because we're streaming on the World Wide Web, so everybody doesn't have the luxury of having a Citizen bank like we do here. And so, but I do want them to understand that if they go into the bank, they can ask them, certain words that they can use to be able to ask them about programs and the availability of those programs. And
again, they can go in and ask if they have any special down payment assistance programs, and they should be able to tell them whether or not they do it or they don't.
Okay, that's good to know. So one thing that somebody was talking to me about when they knew the segment that we were going to be doing was that with some young people who are interested, but they don't want to do yard maintenance, of course, like we have to do with homes or whatever. But I was trying to tell them that there are some condos or townhouses, and you're still building equity in those where they wouldn't have to have the upkeep of a lawn and those kind of things. But there are some, I don't know, Greg probably knows better than me how many are around in these areas. Is that a viable option? But I wish I had known that when I stayed in an apartment for a number of years, and when I left, the only thing I got back was my down payment, my deposit. And that was just because my mama had helped me to clean up the place. So, it was back through and so I was able to get that. But all of the nothing else. You know what I'm saying? So nothing else to help out in trying to move. And then at that point, I was trying to save up to buy a home. And I'm gonna tell you a little funny story. Okay, so my car, I didn't want to get another car because I was trying to save money for the down payment. And I'm like, I can't get another car. And my car was breaking down every time I turn around. And finally, my father said, look, I know you're trying to get a house, but if you can't get to work, it's not gonna matter. So you're gonna have to do something here in this process. So it's kind of hard when you're young and starting out and you're trying to buy a home, and then you got bills to pay for your rent and your utilities, and then you're still trying to save up for home ownership.
Yes, that can definitely be a challenge, Dr. Fortune. I love the example that you just used because, and Greg will be able to appreciate this as a mortgage lender. I cannot tell you how many times I've heard mortgage lenders tell me that they get someone pre-qualified for a mortgage loan. And don't get me wrong, it's one thing if you have to go out and purchase a vehicle. It's something altogether different if you just up and decide you want to do while you're in the process of trying to purchase a home. But getting back to my little story, I've heard countless times how mortgage officers get someone qualified to purchase a home. They do the pre-approval or the pre-qualification. Let them go out, find the home that they want, have them come back only to find out that they have gone out and purchased a vehicle or made some other significant purchase. And now guess what? It completely changed the qualification picture that someone like Greg had painted for them earlier. So I say all of that just to say, for those of you that are in the market to purchase a home, it is important to prioritize. And be careful about taking on additional debt while you're looking to purchase a home. Greg, I don't know if you want to speak to that at all, or if you've had some of those nightmares.
Yeah.
Yeah. There's all kind of nightmares about that kind of stuff. Car purchases, and we see a lot of times that people get really excited. They're within 2 weeks of getting that home. So what they want to do, they want to go buy that new refrigerator, new washer, new dryer. And Miss Kelly, as you know, is going to run a sale this weekend. So and I'm not supposed to mention any names, but the furniture store is going to run a sale this weekend. So they got to go get that couch.
Right.
And now all of a sudden, you know, you add all that up, you basically bought a car again too. So we run into all those kind of things. But Dr. Fortune, I got to go back to your story and tell you a story I told my son. When he bought his first house, he said the same thing about, Dad, I didn't like it when you made me cut the grass at our house. Now I want to have to cut my own grass at my own house. Yeah. I said, well, let me tell you, son, you've got fiscal responsibility of purchasing the house. And now you're going to have some physical responsibility also. Keep you in shape. Get out there and start cutting grass.
Well, and you know, and that is good, but I just want you all to talk just a little bit more, because I think that people don't understand when you are trying to move toward home ownership, you need to limit the things that you're buying and not making any big purchases. I think they need to understand the importance of that.
Yeah. So, you know, in that first week or so of taking the loan application, then finding the house, everybody's all excited and think, okay, we've gotten approved, we're doing this. You have to remember what kind of investment this individual's making, but also what investment we as a lender, like Trey said, you know, we're managing our risk on this. So just because you're approved on Monday doesn't mean we don't stop monitoring everything until the loan is closed.
Okay.
So once we pull that credit that very first time, there's a monitoring system in place. If you go out and apply for another credit card, if you go out like I said, I mentioned that furniture company a minute ago, you can go get 0% down if you pay it off in 12 months, and but they pull you credit to do that. We're gonna know that you've been shopping at that furniture store. So, you know, the loan process usually takes 30, I'm going to say 30 days. We can probably close them in 20 days. Sometimes, because of circumstance, it may take 45 days. But we're talking about a relatively short window once we've started the process.
Okay.
So you've heard of the keto diet and the Atkins diet. Well, I tell everybody be on the peanut butter and jelly diet for 30 days. We're gonna live very vanilla. Everybody can do that for a month.
That's right.
And then you get in that house, and then you can just go hog wild after that.
Once you seal the deal, but now you can't just go hog wild, because you still got to pay that note.
That's right. That's right.
Because we want to make sure that you're able to maintain that house
That's
once
right.
you get in that house.
Yes, that's exactly right. All great points that Greg made, Dr. Fortune. Just keep in mind, and Greg said it well, it is about a 30, 45-day window, and one that you'll need to be very disciplined within. It's just a good idea, if at all possible, not to purchase anything on credit during that period of time. Because keep in mind, this is, there are different variables involved with the approval process. Credit is just one variable, but debt to income is another variable.
Right.
So obviously, if you go out and purchase something on credit, then that's going to change your debt to income ratio more than likely. And if you purchase something, it's probably going to take it up. And we do have debt to income ratio limits on our loan products. And so you could exceed that limit by certainly going out purchasing a $50,000 vehicle, like Greg mentioned earlier. And at the very least, you may qualify for less of a home. Before you purchased it, maybe you qualified for a $350,000 house. Now you've gone out and purchased that. Now maybe you only qualify for a $200,000 house. So it's just in general, it's a good idea while you're in this home buying process to prioritize purchasing this home above everything else, and just don't buy anything else right now. Wait until you get into your home.
So what are some other things that you all are looking at to try to see whether or not a person can get into a home?
So we've hit on the two biggies.
Okay.
The first things we look at is credit score. For me as a lender, that's the one I'm going to look at first, because if you don't have a qualifying credit score, it doesn't matter if you make $1 million a year.
Okay.
So let's get that. We're going to figure out credit score, and then we're going to, like Trey referenced, we're going to look at the debt to income ratio, and we get those two pieces right. Then we start looking at some little nuances of different loan programs. What about job history? That's something we look at. Are you somebody that has worked at this spot for 6 months and then changed over and worked over here for 3 months and then went somewhere else 6 months, and you didn't like any of that? So now you're just going to be self-employed, So we look at that part too, not just how much income, but let's look at stability of that income.
Yeah.
I'm not saying that job hoppers is something that kills a deal, but that is something that we look at.
Yeah.
Especially if they're going from one field to another field. Maybe they're for a while they were working as a car salesman over here, and then they did that for 6 months or so and say, well, I don't really like that, so I'm gonna go over here into this other field, and that has nothing to do with the auto world. Okay, how did all that happen? And are you really stable with the income, because you're jumping around in all these different fields? So the credit score number one, debt to income ratio number two, that job that you're doing is three, looking at the stability of that. In the perfect world, we'd like to have somebody on the same job for 2 years. That's the perfect customer. Not everybody likes their job, want to hang around for 2 years. So, and we understand that, and we can, if it makes sense, we'll make it make sense on a job change like that. Another thing we look at in relation to that job is, okay, did you quit a $50,000 a year job to make $40,000 now at your new job? We got declining income. Is there a reason that the income is declining? The job income stability is definitely something we look at. So that, I would say those are the biggest pieces of the puzzle. The propensity to save is always something that makes us feel good. Do you have, I'm not saying you got to have $10,000 set aside in the bank. That's hard to do. But do you have something over there?
So they need to show some not just where they're paying the bills on time, but they need to show where they're saving a little money.
A little left over. There needs to be just a little, and that's hard to do. I understand that. But have $1,000 set aside somewhere, because everybody's going to have an emergency of some sort. You're gonna need some money. So we like to see that you have something there to fall back on. In fact, a lot of our programs require that you have 1 or 2 months of that house payment it saved up somewhere. So just because you got it, don't spend it. Hold some to the side.
Well, Greg, I'm gonna ask about something that's a bit controversial but this is something that people have been hearing and they feel it's true. I've never seen it with you because I've had personal dealings with you. So I mean, in terms of banking, but some folk just feel that they're gonna be discriminated against because of their race, and I don't. And maybe that's a possibility. I'm not going to say that it is not. But if a person feels that they have been, now there is an act, the Fair Housing Act, where they can file charges if they feel that they've done all of the right steps, everything that you all are talking about, and the banker just won't give them a chance, and they think that it is due to race. There are options for them if they feel that way.
Yeah, unfortunately, that is still out there even today. There's bad actors in every field. Banking not excluded from that. We try to put in stops to prevent that from happening, but you're always going to have some bad actors. But any lender. If you feel like you're being discriminated against, that's not the lender you need to be going to anyway. Because you need to have somebody that you can establish a rapport and a relationship with. Because any lender / banker that is worth anything is more about the relationship. Yes, I want to get you in this first house so I can finance that second house, and then on down the road, I'm going to finance your children's house.
Right.
That's the way I get to feed my family is by doing that. So,
well, let me ask you this, because like I said, I definitely had a positive experience with you when I was buying my second home. But my question is this. Does the person have to live here in order to use Citizen Bank?
Oh, I hate to answer a question like this. It depends. If we're doing some of the traditional financing stuff like a conventional loan or an FHA loan, then no. I am licensed where I can finance in just about every state in the United States. There are a few exceptions to that. But you know, if they're going through one of those programs, then yes, I can help them with those. There may be limited in the types of down payment assistance programs because those are going to vary from state to state.
Right.
And in some cases, county to county, even, or parish to parish if you're in Louisiana. But to do those kind of programs, yes. Some of the other programs that we've talked about, Citizens National Bank is a community bank, and we focus our in-house products on the people of Mississippi.
Okay.
Like that home opportunity loan that Taisha was talking about, that's going to be somebody living in Mississippi.
Okay. Okay.
But those other programs, absolutely.
Okay.
And I will say, you know, if somebody wants to reach out to me, and I'm going to speak for Trey and Taisha on this, and I may get in trouble later. But if anybody that's listening calls us and say, you know, I don't know how to get started. I don't even know if y'all can help me because of the area I'm in. We have networks of different lenders all around, and if we don't have what they need or can't do what they need because of their location, chances are we know somebody that we can direct them to help them get started.
So we're getting close to the end of our time, but before we go, whatever information you all want to share so that others know how to contact you or whatever, please let them know. Okay. Oh, I'll go on. Okay, I see you.
And Miss Melanie, if I can just say this before we end, we do offer one-on-one credit counseling. Like if someone if they just wanted to kind of know where they are, how to get started. Like Trey mentioned before, he and I, we have the ability to do a soft pull. We can soft pull their credit to where it doesn't hurt them, to be able to tell them what they need to do in order to get their score up, to put a plan together for them so that they can get on that path of homeownership. So we can sit down and talk to them about the importance of credit. We can talk to them about the steps that it takes and what all the things that a mortgage we require to get a mortgage. So we can do that for them, and we'd be happy to do that. So yeah, they can give us a call. We can do it by phone. We can schedule appointments. Trey and I get to travel. I get out of the office if we need to meet someone in the Jackson area or DeSoto area or wherever that may. We can do that for them. We can accompany them with that.
That's awesome. I mean, I've learned a lot from you all today. I'm going to allow these last couple of minutes for Greg, because Greg may have some parting words that he wants to say before we end our podcast. And again, let me apologize for the earlier technical difficulties. I'm working on this thing. I'm getting better, but it's a working in progress. I just need to apologize. But Greg, I'm gonna give you these last 1 minute.
Don't put any pressure on me. I'm going to use 30 seconds, and I'm going to let Trey have 30 seconds. So Trey, get ready.
Okay.
All I want to leave with is home ownership is something that is attainable if you are committed to obtaining it. And it is something that can, I can't stress enough the equity that you can build, the generational wealth that one family can start that process and can go through generations, showing them how to do it and how you can grow that wealth. So it is attainable. It just takes a little work to get there. Trey?
I echo everything Greg said. That's exactly right. It is attainable. Yes, you can become a homeowner if you're renting, if you're staying in the basement with your parents, whatever the case may be. There are programs and products out there that can help you attain the American dream of home ownership. We invite you to take that first step. We've posted our number here on the or in the chat. Please reach out to either of us and make that first step toward home ownership. Thank you so much, Dr. Fortune, for
And
having
I'm so glad. Thank you all for coming today, because you all have really provided some great information. I hope our listening audience learned a lot. I've learned a lot, and I just hope that they start calling you, because we want to move from feeling hopeless, I don't know what to do, to hopeful. I have a plan now, and I'm going to work on it, and I'm committed to it. Thank you all. Thank you all so much.
Y'all have a good evening.
Bye-bye.
All right, bye-bye.